Hi everybody, this is Phil Holoka from Complete Captive Management Services. Today we're going to talk about the 4 questions you need to ask when you get your hands on the most recent financial audit. So let's back up a second. We're only talking about group captives here because a single parent captive, you only have one investor, the parent. And when a parent starts a single parent captive, there's no financials to see because they haven't been created yet. But when you're a business or an employer looking to join a group captive that's already been in existence, the audit is vitally important because you're investing in that business, the captive. So you're going to want to get your hands on it. So what does it mean by the most recent? Well, most captives follow the fiscal year with a calendar year. So the books open for a captive on January 1st, and then they close on December 31st, which means their fiscal year is also a calendar year. And most regulators require an audit to be submitted within 6 months of the close of the books. That means it's June 30th. So if you're looking to join a group captive on June 1st, you're probably not going to see the most recent audit because it really hasn't been finished yet. So in that case, you should look at the most recent unaudited financial statements, and those are under the control of the captive manager. Okay? So if you're joining a captive by August 1st, you should get your hands on the most recent audit, which is the immediate prior year, because it's already been filed. Now, you got to read the audit. That's simple, okay? The first section is the independent auditor's report. That section is where you're going to find the auditor's opinion. Now, from last week, there are 4 audit opinions. 2 are good, 2 are bad. If you read the first section and it has a bad opinion, you can stop right there. There's no need to invest in that group captive. Not a good idea. Okay? Second section is what you came here for, to look at the financials. The financials are composed of 3 primary financial statements. The balance sheet, which talks about the corporation's financial stability. The profit and loss talks about how the captive can pay its bills and liabilities. And then the cash flow. Okay? What's important about this is you should look at comparative financials. And what I mean by comparative, that means if we're talking about the 2021 audit, you're going to see 2 columns, the 2021 column of the financials and the column 2020. Therefore, you can do comparative analytics between the 2 years. Now, the regulators generally don't require comparative views, but it's an indicator of the captive's overall success when they demonstrate year-over-year financial statements. That's one thing that you got to do. The other thing that you got to do is look at ratios. And you can't calculate ratios unless you have comparative presentation. Some of those ratios are year-over-year growth, year-over-year changes. Maybe those changes are membership populations, liability changes, and so forth. And then the P&L, you're going to see general and administrative changes. This is a big one. You want to see G&A ideally be stable, if not go down. Okay, and we'll talk about that a little bit later. Also, you should be looking at other group captive financial audits, because in order to successfully compare the financials, you have to have another business, another group captive to compare those to. It's just good practice. because you can't get a full picture with just one financial audit of one group captive. So get your hands on multiple if possible. The fourth item are the footnotes. This is the storytelling. The footnotes are the text that describe various attributes of the financial reports, okay? And it should be very easy to read. There should not be deep accounting jargon within the footnotes, okay? The first section is going to talk about the organization, the history of the organization, the purpose of the organization, and it almost lays out to be like a business plan. It tells a story. The second section are the significant accounting policies, and there's going to be several sub-discussion points within this section, okay? Also very important. But I think the most important in a group captive is the general and administrative breakout. On the P&L, you're going to see a general and administrative number, $100,000. That number will then be broken out in the G&A section. There, you're going to see captive management fees, sales and distribution fees, underwriting fees. You're going to see a lot of fees, travel and entertainment fees. You should be asking questions here. Why is the travel account doubling? Or why has it doubled? Or why is the captive management expense quadrupled, right? So you got to ask questions. The G&A expense line breaks this out. This is where you ask your question, because in a group captive, profitability is directly impacted with G&A. Said simply enough, the G&A strips the members of any type of return of premium or profitability. So, a number of weeks ago, I did a deep dive on ratios in the captive financial statement, part 3. If you're interested, watch that video. And if you have any specific questions, we're always there to answer them for you. So until then, we'll see you next week when we talk about items of importance. Bye now.